So more than half of our businesses through the cycle, 50-60% is coming from the US and Latin America. So this is really important. We're sort of half Europe, actually more than half in the Americas. So that is one reason why we will continue to deliver next year, when a lot of the European-only based banks, will tend to slow down. So we will continue to grow, and most of our growth is going to come either from the Americas or from our consumer bank, which is actually also Europe. If you go to Europe as an economy, so by the way, this is no different from the world. What do we need in the world? We need growth. Without growth, we cannot finance the transition. We cannot invest in digital. Europe needs faster growth. Europe needs to attract more investment, attract talent. And this is something which we all know, and I believe we're conscious. The Draghi, study is working on that. How can Europe be more competitive? So yes, US-based banks have done better because there was more growth. There's other factors, of course, and that is the basic reason. We have growth. Our businesses are very strong in the Americas, as we've said, and we'll repeat now with investors. We have double-digit growth in net interest income coming from South America, for example. We have our consumer business in Europe, but also in the US. Europe needs to grow faster. That is the simple answer.
Anna, let me tackle the inflation story with you through the lens of the business. I can see that operating expenses were up 6%, higher inflation cited here. Any evidence that some of those inflation headwinds are starting to fade this year?
So clearly, we see less inflation this year in many of our markets. In countries like Brazil, rates started to come down already a year ago, actually a bit more. So inflation is one of the risks. Right now, we see that is decreasing. But again, in our case, we're seeing already benefits of that. And that's why Brazil will do better next year, because already rates are coming down. We have a negative sensitivity there to rates. And really the big risk is geopolitical. So what happens with and I've said it in my statement, there are increased geopolitical risk. In that context, Santander should do better because of diversification, because of our scale, which we're now leveraging through our 5 global businesses. And we're very confident 2024 will be even better for Santander than 23.
Anna, we've also spoken before about the unique position you're in as you look at this inflation story at your own bank, as you weigh up just how consumers are feeling across Europe. What is the chance of a policy error this year from the ECB not cutting rates soon enough and more focused on taming inflation?
We've been operating for many years in high inflation countries. Inflation is something which hurts the economy much more than not, tackling inflation and really doing away with it, which is what central banks are doing. And I believe that I've said it, going from 3 to 2 is harder than going from 5 to 4, for example. So we do need to ensure that the second round effects are, under control. Again, that's why the geopolitics could be one of the risks for this year that we all need to be aware of. But we need to ensure sustainable growth, and that means inflation under control. So it seems that's the way it's going. Consumers in the US, by the way, are surprising us with the strength. In Europe, the countries where we have a presence are growing faster than the rest. So Spain, Portugal, and the countries where we have a bigger presence in the Eurozone are growing better. And inflation seems to be under control. Again, we need to make sure that continues for the next 6 months.